Welcome to a new episode of DT Vector, the podcast where we explore the people, technologies, financing, and ideas that are shaping the future of the built world. I'm Eugen, your host, and today I'm joined by a special guest, Gunter Deuber. He is head of research at Raiffeisen Bank International. He has over 20 years on analyzing financial markets and economies in CEE. He will bring for sure a unique perspective on how macroeconomic forces, banking, and digital innovation are influencing the real estate sector. Welcome, Gunter, to our podcast.
Hi there. It's a pleasure to be with you and to discuss the region from a, let me say, holistic perspective.
Yeah, well, thank you for coming. I've seen you at a conference in Bucharest, property forum, and you had a very good presentation actually, because I have to be honest, I don't remember the presentation from all the forums or networking event, but in your case, even it was a, let's say, more analytic, more technical information in that presentation. I remember you really delivered something that I remember. You've been in with Raiffeisen Bank for many years, and now you lead the research division. Could you share your professional journey? How did you arrive at this role?
I was always interested in banking, finance, and Central Eastern Europe, and I started, let me say, to look at those markets 2004, 2005, and then started at Raiffeisen in Austria, in Vienna in 2006, Raiffeisen Zentralbank back then. I switched to Deutsche Bank to Frankfurt, but also looked at the CE markets all the time as a macro or country analyst. Came back to Raiffeisen Bank International in Vienna in 2011. And I was all the time looking at CE markets, macro, finance, banking. And usually the real estate is a very important part of the banking business. And that's, let me say, how the real estate topic also became more and more in focus. Definitely residential real estate, very important for the banking business. But over the last cycle, also the commercial real estate, very important element of the banking business. So it sounds like, let me say, a lot of macro and financial analysis, but in the end, also a lot of country analysis and country risks or crises. I have seen definitely the global financial crisis with all the fallout on Central Eastern Europe. We had the Euro sovereign crisis during that period of time, COVID crisis, Ukraine war, and a lot of things maybe the non-CE guys may overlook a little bit. Yeah. We had banking crisis in Bulgaria. We had the balance of payment crisis in several of our markets. And it's very important for the real estate business as well, because a lot of international investors are also looking at those events. And in the end, I think banking and real estate are possibly two sectors that are very much macro-driven economic sectors. So that's why the macroeconomic analysis usually plays a very important role here as well.
Basically, from what we're seeing, it's a very important role, and there are information that everyone could rely on. But what does being head of research mean in practice?
So I think you have to differentiate the tasks and responsibilities. On the one hand, you are part of active, let me say, client meetings, client dialogues. And I think it's very important always to cross-check your analytical views, let me say, with client views. And I think it's a very important part of the work. And it also helps you to stay, let me say, grounded. On the other hand, you're involved in a lot of planning and strategy discussions with clients, but also within the bank, because in the end, larger organizations do need a rationalization of the business strategy. And this starts with numbers and all these things. And in the end, this means you have to form a sort of base case scenario where you have to weigh all the upsides and positive aspects and all the downsides. And I think as head of research, you have to be aware that you have a sort of neutral role and that you might have conflicting interests. Yeah. because usually the business side is on the more optimistic side of the planning. Usually the risk side is on the more cautious side. So that's why you all have to very cautiously weigh the up and downsides. And I do forming the base case, balancing the views, maybe of some individuals or some entities in an organization like Raiffeisen. You have sometimes also diverging views between the head office and the local entities. But I'm personally, with all the crisis experience I mentioned previously, I'm very cautious when someone comes to me and says, look, this market, this asset, or this time is different. Yeah. So then I want very good explanations that want to have a deeper look at.
Mhm. And usually, who not wins, but how the decision are made? Because okay, if we're looking from the entrepreneurial perspective or small businesses part, you we usually tend to, okay, I have a feeling, maybe it's a gut feeling or some discussion between the, let's say, our network or in our industry. But at one point when the company grows and wants to be more, let's say, on the long term on the market and not one man dependable, needs to take this kind of decisions. How are those decisions made when you have the, let's say, go to market strategy trying to get more business, and you have this part when you analyze the risk and the environment?
So I think for bigger projects we are running, or let me say certain country strategies, it's important to have a base case for at least the next, I don't know, 2 to 3 years, but that also your risk in terms of the up and downside. So realistic up and downside. So you have a sort of central planning scenario that makes up maybe 50, 60, 70% of your, let me say, expectations or probability, but that you are very much aware of, let me say, the tail risks that you're running, and that you then can always cross check. I'm still in the baseline scenario, or do I diverge? And I think this is very important for larger project business decisions, and especially also if long-term financing is in. And usually banks also want to see at least certain elements of such strategies and planning when it comes to longer financing decisions. So I have to disappoint you. Some planning, maths, calculations, and risk scenarios are usually part of the.
Yeah, let's say the small businesses have to learn from what stable companies are doing in the region, so we can learn from each other. I'm telling you that, and for the listeners, and also because, let's say, we're doing a lot of BIM implementation in our industry, but everything starts, and every discussion should start with the strategy. Is the strategy for the next 5, 10 years? Okay, it's a strategy, or maybe it's a plan, but you have to have that in mind to know where you're going, and after that to create the plan and to put all the resources to work. But sometimes, or many times, this strategy is missing.
Fully with you, know where you have to stand in 5 to 10 years, what's your strategy, but every investor then wants to see, are you on track? And then you come to this more concrete 2, 3 year planning horizon. Are you still in a sort of valid bandwidth of your planning? Are you diverging on the up and downside? What are your mitigations, let me say, to come back to your planning and all these things? So it is like this.
Mhm. Yeah, yeah. And from the, let's say, investor perspective, if you are looking at this area, at the Central and Eastern Europe, what the data are saying right now, what are the strengths and vulnerabilities of the region economies?
I think there are certain countries or markets that have seen substantial structural macro financial improvements. Yeah. For instance, let's name here Czechia, Poland, by the way, also Slovakia. The EU integration helps a lot in the financial sector, also for market development or in real estate finance, because it offers long-term financing, for instance, to developers, but also for the banks, it's easier to get long-term financing. Also, a lot of other countries have improved in their external positions, banking sector maturity, all this helps. But we also have to be really, let me say, open and transparent about this, that some of the countries in our region, be it, for instance, Serbia, be it Romania, these are still emerging market style countries from an investor perspective, with certain market risks coming from volatility, political volatility, economic volatility. So I think that we have a very divergent region with some countries close to mature markets, while others still in the more emerging market space. And this is very important because if you talk about larger projects, if you talk about real estate financing and all this stuff, if you talk about cross-border financing, these emerging market style risks can sometimes hamper cross-border flows. And it's pretty obvious that you can track a lot of things in the data, but we have an increasing focus on political and institutional risks in the investor community, and those things cannot be easily captured by the data.
And if we're looking to all these macroeconomic conditions, can you, let's say, see in the future who will be the winner? Who will be the winner in the region? What country is underrated right now?
So I think countries that are slightly underrated, but that are already on an improving path, are countries in the Western Balkans that show a certain progress. By the way, also Croatia made a big way forward, and Albania. I think the next potential candidate, if we follow a long-term strategy, which is on the one hand what is needed now in case of Romania, fiscal consolidation, and at some point maybe a credible euro area entry strategy would help the country a lot. Because as I mentioned, in case of Slovakia, it helped a lot for the real estate business, for longer term business planning to be part, let me say, of the euro area. Yeah, so these are some underrated countries flying a little bit below the radar. Usually investors in this region are focusing mainly on Poland and Czechia. And I think sometimes it's important to look also at those countries, like I mentioned, that are not at the prime.
And okay, let's look at the scenario that the war in Ukraine will end in the next, let's say, let's be optimistic, in the next week. What will come out of that in the region?
So let's say what is still very important to understand, even it is maybe not fully rational, the war in Ukraine keeps some foreign investors on the sidelines when it comes to long-term engagements in the region. It is like it is, whether it's rational or not. Secondly, I think what is pretty important that part of a stabilization in Ukraine, talking about rebuilding Ukraine, but also securing, let me say, Europe from, let me say, military perspective requires investment in the region, also touching the logistics, as I mentioned, and all these things. Yeah. So beyond the headline noise, a stabilization in Ukraine will be positive for the region in terms of investor sentiment, willingness of capital to go into the region, and there might be even indirect positive spillovers in the industrial and logistical sector when we talk about real estate.
And in your opinion, how the markets fluctuate here in CEE versus Western Europe? What are the, let's say, signs? We're seeing overvaluation, overheating in some segments.
So I think it's very important, as I mentioned initially, to understand that real estate business is a very long-term business. So a real estate cycle can last much longer than a classical economic and interest rate cycle. And here we have to understand that our region went through a very challenging rebalancing following the global financial crisis 2007, 2008, where we had massive collapses of real estate prices, especially in commercial real estate. In some of our markets, the price levels until 2022, 23 haven't recovered to these levels seen in 2008, 2000. It is totally different to Western Europe, where we had, I would call it, definitely signs of overheating, overvaluation in the real estate and especially in the commercial real estate. This means also now in the recent years, the price corrections in Central Eastern Europe, especially Czechia, Poland, Slovakia, Romania, had been rather modest, which means, yes, the valuations in our region are a little bit stretched, but we don't see a fundamental overvaluation. But the price correction in recent years hadn't been very strong, like in Western Europe, which points to more stable market conditions. Has to do with the investor base. We can discuss this later. What is, on the other hand, very important, the rent growth in Central Eastern Europe, which is very important for the real estate market and the long-term financing conditions, had been fairly solid and much more, let me say, on an upward trend than in Western Europe. That's why we see the overall real estate market not overheated or overvalued yet. Nevertheless, in the retail segment, there is a little bit of risk of oversupply. You have a massive build-up capacities. As I mentioned, prices haven't corrected that much. And we have an interesting competitive landscape here. We have still the traditional retailers expanding. We have new local emerging players. It's a little bit a more tricky market segment, while the overall picture is fairly solid, as I mentioned.
And from the bank's perspective, how important are cross-border capital flows versus domestic financing for the region's real estate development?
So I think it's very important to understand that here the region we are talking about is totally different still from a European or broader European market. So in Western Europe, in broader European markets, also taking UK, cross-border flows are very important for real estate, especially because investment funds are very important. Yes. So roughly 50 to 70% of all real estate financing in Western Europe comes from investment funds, is cross-border financing. This is much more limited in our region, where in some cases we have 10, 15%, 17% of cross-border financing in certain more mature markets, but not much more. This has to do that cross-border flows, and especially also from large UK and US investors, are lacking to the extent we've seen this in Western Europe. Has to do with the risks we discussed, geopolitical, political, FX risk, and most deals have ticket sizes that are too small for the large investors. But this means for local banks and also, let me say, local, I would call it cross-border banks like us, there's a lot of business to be done. And we are trying sometimes then also to bring large international banks into the deals we are structuring. I think there is still a long way to go until, let me say, we reach a level, let me say, we've seen in, let me say, Western markets. We have seen, for instance, also more mature countries like Czechia and Slovakia. Yeah, you may end up at 20% or so, or that is foreign to, let me say, cross-border, but that's it. Yeah. In Western markets, we are sometimes 50% or more.
And what do you think should happen, should improve in our region to get closer to the Western Europeans?
As I mentioned, it's a reflection of the risk profile. And as I mentioned, it makes maybe sense to think about in those dimensions. Euro membership pays out a lot in long-term financing. And therefore, yeah, it could make sense to embark on credible euro area entry strategies. On the other hand, it's the classical institutional factors in the real estate financing, cross-border financing that count a lot, yeah? Which means, let me say, on the one hand, institutional political stability, and to what extent international investors trust the enforcement, let me say, of their claims also in the local institutional sphere. Yeah? And I think we have to be aware that institutional investors, international investors do know that there are certain economic sectors where sometimes, let me say, there is a strong influence from local players or where they cannot easily enforce their property rights. And I think here the region still has a long way to go. But as I mentioned, even in cases like Poland and Czechia, the involvement of cross-border capital is still limited. Yeah. It is like it is. It's deal sizes and certain reputational factor. And as we discussed, hopefully, end of the war in Ukraine brings maybe also a little bit more appetite towards the region.
Yeah, but if we're looking not statistically, let's put it emotional. What do you think will happen in 20 years? Will it get closer, or the Western European countries will evolve faster and faster and will be hard to get?
I think we can tackle this question also when looking at the long-term drivers to the real estate markets, because if I look at current and credible, let me say, long-term projections when it comes to population growth, we have certain markets in Western Europe, be it Germany, be it Austria, where population, depending on the point of reference, will shrink by 10, 15, maybe 20%. Let's see, some of those things might be in a range that you can partially compensate by migration. In a lot of CE countries, if things are not changing completely, population may shrink by 30, 35, 40, 50%, depending whether you take 2040, 50, whatever, as a point of reference. It's pretty obvious that population growth and demographic is also a part of the economic growth. So unless we see more healthy demographics in our core markets in the region coming from either the domestic population and or thinking about the productive migration, it will be challenging to fully catch up in terms of wealth levels, which means in our markets, and it's very crucial for the real estate financing and business as well, we might see even also a very strong polarization between prime locations, meaning capital city and the little bit surroundings, and the rest of the countries. So this means there might be still viable mid to long-term business being done in the capital cities and surrounding areas, while the rest of the country might remain somehow left behind. And this I see as a really long-term important challenge for firstly catching up on the macro level, on a country level, but also for the stability of the real estate markets beyond the capital city.
So we can say that the real estate performance it's directly connected with the demographics. That's right.
Yes and no, because demographics is a super long-term factor. And at least for a certain period of time, and maybe even 5, 10, 15 years, other factors can outweigh the demographics. So, for instance, we have seen in our markets for a long period of time substantial wage level catch up and real wage growth, which was somehow compensating for the demographic trends. And this can still go a few years, but at some point, the demographic factor will become much more important. But yes, in the residential real estate, for instance, you have trends that can last for 5, 7, 10, 15 years, and some trends can overweigh also other long-term structural trends. In other market segments, we have more cyclical developments, but I think this is very important to look also at these long-term trends. And given unchanged demographics and attitudes, maybe towards migration, I think it will be very challenging to keep the very positive long-term outlook on our region.
Yeah, we'll see. There are a lot of factors. Now, personally, I'm thinking what's, let's say, happening more in Bucharest, maybe in Romania. We have the policy makers that are having a strong word about what's happening, and they influence a lot the real estate performance. But yeah, we'll have to see what is changing in that direction also. Going to the real estate market dynamics, according to your research, how is the shift toward hybrid work reshaping office demand in the region? Does the numbers suggest a structural change?
I think we have to differentiate also a little bit here between the overall global or broader European trend and trend in our region, which is pretty similar in our region markets compared to the Western markets. Yes, there is a trend towards prime locations because it makes sense from a lot of perspective. Less workers come to the office. They want to have nicer locations, so to speak, to come to the office. Yeah. But this is, by the way, a trend that has happened already a few years ago. Other than that, we see in some of our markets that the price trend is in the office segment more favorable than in Western Europe. And also the deal flow remains somehow stable. What is behind this trend? I think we have to understand that in a lot of markets, be it Romania, be it Albania, be it Poland, other markets, the office segments then still profit from the fact that service offshoring, and the most important thing is call center creation, but also other things, yeah, that require still a certain physical presence. The service offshoring remains a trend in the region. Yeah. And at least from that perspective, I'm slightly more positive for the office segment in the region, yeah, and especially in good locations. Speaking once again, maybe prime locations, capital city, where you have the talent and labor pool for this service offshoring. Yeah. And I think this service offshoring will remain in place. And what is the beauty here, I would say, if our region and our markets manage to show a decent labor pool for this service offshoring and or the implementation of AI tools, yeah, be it in the, let me say, service industry or in the industrial space, it could be attractive. Yeah? And this is how we see the region. And as I mentioned, deal flows and price trends are supporting this view.
What about logistic and industrial segment with, let's say, not looking at the information and the dates, but we've seen a lot of growth in the past years. How you're seeing that we're nearing a saturation point?
So definitely logistics industrial is a little bit more cyclical from a, let me say, pure segment perspective. But we are also here mid-term positive for our region, coming from the nearshoring perspective, especially the German fiscal spending needs also industrial capacity, and the rationale to source certain things in our region remains in place. And as I mentioned, everything we talk about, yeah, in, let me say, European defense, NATO build up needs also logistics and maybe also certain dual use logistics. In a lot of countries, we have a decent defense planning, once again, that is looking at such things and to what extent maybe there are also dual use facilities. And secondly, as I mentioned, we have in the retail space in our region an interesting trend that beyond the big players, we see a lot of emerging local players, e-commerce, which also requires more logistics in terms of first storage, but also delivery. So the natural, let me say, trends in our region suggest that logistics industrial should do okay. Even prices haven't really corrected. Yes, the valuations are, let me say, sportive, I would say, but we still see this as supportive.
Yeah, that's good. About affordability for residential, we know it's a growing issue in almost every discussion in at the, let's say, big events, talking about that From your perspective, how is this trend playing out in CEE?
So residential affordability in our region is, honestly speaking, not as overstretched at first sight some of the discussions might suggest here, because we have seen certain price level corrections, especially if you look at it in real terms. So nominal prices stagnating, we had rather high inflation, wages going up. We are just seeing here in most markets a tipping point where nominal prices once again increase. So short-term affordability has increased. But the most important point is affordability is not just about your current income or real wage growth. It's about the financial wealth. So the financial wealth maybe you accumulated on your own, or overall household financial wealth or wealth over generations. And I think the problem is that the accumulated financial wealth, yeah, in Central Eastern European countries, markets is still much lower than in Western Europe. And given, let me say, the rising house prices, we will end up at some point possibly even in a more challenging situation than we are now. But at least affordability is not as overstretched, I would say, if you compare it to Western European levels. It will be an important part of the political discussion. It makes here and there, I would say, also sense to think about how to support affordability, but more important is also the financial wealth creation. And to start with financial wealth creation, and let me say, at early parts of the life stage to secure the affordability. And I think this is the most important point. And secondly, yeah, to build up wealth over generations, which is still not the case in our region like in Western Europe. But this once it
I don't.
needs
Yeah.
prosperous economies, yeah, as we discussed, we have to keep the catch-up dynamic.
And I don't like to talk as much as politics, but if you can give advice to the policymakers in our region, looking at that and what happened in these past years, what would be this advice for them to look out for?
So on the one hand, depending on local interest rate levels to offer maybe yes subsidies, but really for young families. Secondly, as I mentioned, for housing and financing affordability, to think about credible euro entry strategies makes sense. We have seen a good chunk of, let me say, affordability improvements, for instance, in Slovakia on their successful euro entry path. And secondly, to support the wealth creation via capital markets investments, and maybe even starting at a very young level with certain subsidies. This might be even more, let me say, important than subsidies on the interest rate side, so that, let me say, certain money is put aside not for private pensions, but for private investments, that this is support.
Have you seen in the past years more institutional investors that are becoming more present in our region? And if yes, do you think their involvement improved the transparency and the market standards?
I think we discussed earlier that institutional investors are still very much looking at a few markets in our region. Whether this will support short-term the market development, I think we have to see, because institutional investors could also add to market volatility, I have to say, and can transmit broader financial cycles also to our markets. So I wouldn't expect material progress over the next 2 to 3 years. And I see it more important that we have certain emerging local players in the real estate market that are tapping international capital markets, and this can also add to market transparency and market standard. I see this even as a more tangible road to improvement than international investors entering the market directly.
Mhm. And from a risk assessment standpoint, what are the main vulnerabilities the developers in the region will face in the next 3, 5 years?
So I think we have seen certain improvements in the financing conditions, also with the rate cuts in certain markets. But it seems that we are hitting in certain markets more and more a level where rates will not go down substantially anymore from current levels, or some central banks even had to postpone the rate cuts. And yes, the refinancing on top of certain reinvestment needs could come an issue, especially as the interest rate coverage in our region is not the best, honestly speaking. And secondly, I think developers have to really watch the potential for a widening of the gap between the prime locations, main cities, rural areas, and that the retail market is maybe hitting a certain saturation. So I think these are the most important risk factors to watch.
Yeah. Going to the, let's say, the subject that personally I'm dealing in day-to-day business, this part of digital transformation, the prop tech part that, okay, everybody is speaking about AI,
Yeah.
but I don't know if the, let's say, the real estate sector, to put it like that, put as much value for the information as you do for taking decision. So what are you seeing use cases that are putting digital solution at work in real estate or other part? And if the banking perspective and the financing perspective, are you looking to these options of new technologies?
I think in the real estate business, banking, financing, but in the business itself, yeah, having this sort of digital twin concepts or technologies would make sense. It would give you more a real-time grip on the utilization of an asset, but also on the value of an asset. There is always a certain uncertainty here, I would say, regarding valuation of real estate assets. Here we could see improvements, and especially with real-time data, we could have a more informed stakeholder dialogue between investor, let me say, developer, and all these things. Yeah. So on the one hand, it can help to manage efficiency, predictability, and valuation of real estate assets. Secondly, it could offer then also larger data pools, helping with the valuation, and also, let me say, providing better simulation tools before you start, also in maybe adding to a project or anyway starting a project. Yeah. So it could help a lot in terms of more, let me say, dynamic, more transparent market standards. But I see certain points where it may become also critical, and where it may even change the market more substantially than you could think about. Yeah. So I think with a widespread use and this more transparent business, the market could become more pro-cyclical on the one hand, yes, because as long as there is a certain, let me say, uncertainty about valuations, also banks can play around with it, I have to say. And secondly, we should be, I think, as outspoken as that, yeah, because of this illiquidity premium and uncertainty in real estate financing. Yes, there is a certain illiquidity risk premium in there. Yeah. On the one hand, it can improve transparency, but it can also dilute certain premium also at the lenders, at the banks. Yeah. So I'm not sure if we wish for that. Yeah. But it can offer also a lot of transparency and predictability.
We'll have to see how this will go in the and will be in the future. If I'm looking now, but okay, we're looking at the cadastre. Cadastre is a digital twin, but is a 2D line. But if we're looking maybe in not 10, but I don't know, 20 years, the technology is there, the processes are there. We can build on that and to have more, let's say, more transparency for, let's say, for who are the bigger owners of build environment.
Yes.
Are the administration, the countries that are owning a lot, and at least for efficiency in the public sector that happen, to put it like that. And if we want to use AI in, let's say, in every step we're gonna make, it seems that way, that will be in the future. Probably we'll have more and more use cases from day to day, from year to year.
What I also think
Yeah.
could be interesting for the industry, and there are certain concepts, because part of real estate financing is the illiquidity premia, yes. But on the other hand, sometimes, as I mentioned, real estate finance is about also large ticket financing, and this also involves certain risk premia. So if we go more into the tokenization of real estate assets, it would be easier to participate also with smaller sums. You can bring more retail capital also to the commercial real estate, but then you need exactly what you said, all this documentation, transparency. Yeah? But for the liquidity of the market, this tokenization in combination with these digital twin technologies could be very important. But it's a long way to go, I would say.
Are you following the, I don't know, the regulation that European Commission are putting at work in that part, in the digital part?
The tokenization of assets is something we are looking at. It's important because you can apply it, as I mentioned, to financial assets, but also real assets. Yeah. And so you can deal smaller fractions with more transparency and all these things. So this is an important route to go. But I would prefer a not too much over-regulated environment here. But let's see.
What about solutions for ACG? Because I've seen a lot of prop tech startups in that direction and correlated to the green financing. I'm more of a, let's say, technical guy. I'm looking at the information that it's built from building the real asset and having it in the digital form also. Have you played with this kind of solutions?
So I think ESG financing is exactly about measurable and credible data. Yeah. So if this digitalization, twin technologies can to add to that one, this can help. And especially as large banks are very much anyway interested in greening their loan books. Yeah. So there is an indirect benefit. Yeah. And I think, for instance, yeah, CO2 footprint, water consumption, energy consumption, this is very measurable and actionable. Yeah. So these are very concrete ESG pillars. And if we can add transparency here, would make sense.
What barriers are you seeing right now? Technical, regulatory, or cultural barriers in these adoptions of new technologies? And now maybe I'm thinking at our space also, because if I'm looking to China or US that are, let's say, putting all the money on technology part, and I've seen even a big summit on AI that President Trump hosted at Washington. Do you see the same approach in EU?
From various angles, not. Yeah. So first, I think we had to look at those topics also, especially in our markets here in more Western Europe. So in parts of the private sector, and especially also in the industry, yeah, we have a certain reluctance towards these technologies and to apply them. This is maybe more cultural. On the other hand, yes, we in Europe are also, from a political regulatory perspective, less open to those technologies and say, look, let's play around with them and then let's see what's coming up. But on the other hand, this offers certain opportunities to our markets and players from Central Eastern Europe, because societies and businesses in some parts of Western Europe are still more cautious. So if you come with solutions and technologies that can support players there in this AI transformation, this could be an attractive, let me say, niche or business. And in some areas, we know it very much from the banking. Some markets, some societies in Central Eastern Europe are more digitally affine or mature than some Western societies. So there is even a certain, let me say, competitive edge for the region if this is well exploited. On the other hand, in our markets, let's see how much the public sector is also willing to engage in this journey. I think we implicitly discussed it with the real estate finance. Let's see. But I see it also as a certain opportunity, this digital divide we have between certain parts of Western Europe and the CEE world as an opportunity.
And recently, in fact, in the last year, Raiffeisen launched a program, Moonshot X, to support regional businesses that are willing to grow in our region or to expand even to US. And even our company, Graphene, had the chance to be part of it. But looking from that perspective and your perspective, what types of programs or initiatives should states, companies like yours or entrepreneurs in the region should focus to accelerate the growth in the coming years?
So I think for us at Raiffeisen, together with our colleagues in Romania, but we also pushed this to the group level, it was important to offer companies first the exposure to the more international scene, because we are confident, and what I mentioned initially, that in some of our markets or some entrepreneurs, maybe even more digital than the Western world thinks, or some Western Europeans, that they get the exposure to international investors, the opportunity to scale up. And as I see this as a private sector challenge, to deliver on the AI implementation, I'm a big fan of such projects between companies and entrepreneurs. And like we did, saying, look, in the past, maybe it was the capital that was flowing from west to the east in the initial stages of transformation. Maybe now it's the intellectual, let me say, property that can flow from the east to the west. And this is what we want to support.
Okay, so we're almost at the end of our podcast, but I have a few more, let's say, personal or forward-looking questions. If you could give one piece of advice to your younger self at the start of your career, what would it be?
So I'm an economist, but with the benefit of hindsight, I said, look, I should have been maybe even more curious when it comes to technological trends earlier. Some things had been already visible, I would say. Yeah. And economics, anyway, is becoming more and more technological. And I'm super happy that I have a lot of young people in my team that are maybe 50, 40, 30% economists, and then more really the deep technology guys that are, let me say, playing around with coding and all this stuff and large data pools, because I think this is a very important element of our business, and maybe it helps a lot to improve things, not just in our business, but in the society, if we have a better understanding of the data, and maybe also earlier, like we discussed it previously in the real estate. And secondly, I studied in the early 2000 years and all these things. I was always very much interested in Central Eastern Europe, but maybe I should have looked a little bit also more open to trends outside of the Western world. So these are two things I would advise, let me say, my younger self, to be even more open to technological trends, and maybe look beyond what is already discussed, and to be open to things that are happening in the non-Western world.
That's actually a great advice. Who do you personally follow in the industry? If even if it's economics, technology, or real estate, whose insights you find most valuable?
So I wouldn't name concrete persons here because others could feel maybe offended, so to speak. But usually I like to follow certain economists, but usually not the ones that having a strong focus on CEE. So I usually try to understand more, let me say, what might be external spillovers to our region, because our region I should know at least up to a certain extent. And I'm always trying to get a grip on the thinking and the debate in the US. because sometimes a lot of people in Europe are maybe a little bit too normative against things that are coming from the US. So this is very important. Secondly, as I'm anyway in my job involved in a lot of discussions, I like to discuss with real estate practitioners a lot. They can offer a lot of insights, but I like to talk to people that are in the market over various cycles, yeah, that have experienced the cyclical nature of the business. I like to talk to people, including my kids, about technology, but with people coming from the technology, I'm always cautious. And then I'm trying to, let me say, not with my kids, because they are not, let me say, what I expect from an entrepreneur in this field, if the people are really well grounded. Because it's good to be in technology, to think about innovation, but in a market economy, we always have to understand you have to fulfill the wishes of other people and clients. And if you're driven by, let me say, technology advancement that is supporting people and clients, I'm super happy. But sometimes I also met one or the other people who is living in his own idea and ambitions. And thinking about what my job is, I have to understand if something is what the society or the people and the clients demand. But there are very good technologies that have this angle, and this I appreciate.
Yeah, I can recommend that. Maybe you know it. It's a podcast in good company. It's I think it's the CEO of Norge Bank, the sovereign
Yeah.
funds from. Yeah, maybe you should look up for that because he has a lot of guests from all around the world and they are speaking, let's say, mostly your language. So maybe that could be
On the
useful
west
for you.
side, I also like very much. There is this from State Street, a podcast. Yeah, they also invite other people, and they combine economic expertise with real-time data tracking. What I mentioned earlier, I like this a lot. But one
Yeah.
person to speak about here when talking about the region, investments, and real estate, I have a sort of, let me say, person I cooperated a lot with who has a deep understanding on the region. If you want a good guest for your podcast, possibly you know his name or not. This is Herbert Stepic. He founded Raiffeisen 20, 30 years ago in Eastern Europe. He was the mastermind of the CEE expansion. He likes the region, but he's also invested in the region. And he's definitely at the late stage of his career, but he's a big investor and fan of the region, Herbert Stepic, and with a strong CEE mind. Yeah.
Oh, that's great. That's a great recommendation. We should look out for him to try to get him on the podcast. Thank you, Gunter. Thank you for all the meaningful insights that you've given. That's all for today episode of DT Vector. Thanks again, Gunter Deuber, for sharing your insights. I think was a pretty good discussion, and we'll follow you more on every platform, even if it's LinkedIn. Or I've seen your posting, and your team is posting some articles on Raiffeisen.com or something like that. You can find it with Google search. To our listeners, if you enjoyed the episode, please subscribe, share it in the network, follow Gunter for more insights from his parts. And till next time, I'm Eugen Ursu. This is DT Vector, the platform that is connecting the dots of the built world. Thank you, and see you next time.